Welcome. Today we'll explore how APIs for AI services can plug advanced intelligence into your existing financial systems. At HIGTM, we specialize in bridging the gap between data scientists and executives, and this presentation will do just that, translating the tech into strategic insight. We'll cover why integrating AI via APIs is now mission-critical in finance, the high-value use cases, who the top AI API providers are, how to implement effectively, the challenges to anticipate with solutions, and how this drives innovation, efficiency, and competitive edge. Let's dive in. As financial leaders, we must understand why AI integration is a strategic imperative. First, the efficiency gains are enormous. Studies show AI can slash costs and manual work significantly. In fact, AI is projected to help banks save as much as $340 billion a year by 2025 through productivity and efficiency improvements. Think about savings, but also better decisions and services. AI APIs can comb through vast datasets in seconds, flagging fraud or identifying trends that humans might miss. Customer expectations in banking have also evolved. They want instant, personalized service. AI-powered chatbots and personalization engines, accessible via APIs, enable that level of service at scale. And importantly, many of our competitors are already investing in AI. Nearly half of financial organizations report AI has improved their customer experience, and over a third say it created operational efficiencies. The message is clear. To stay efficient, innovative, and competitive, now is the time to integrate AI services into our systems. The applications of AI APIs in finance span our entire operation. For instance, fraud detection is a big win. By feeding transaction data through an AI API, we can catch fraudulent patterns or suspicious behavior in real time, far faster than manual reviews. This not only protects assets, but also builds customer trust. Another major area is personalized customer experience. AI-driven recommendation APIs can analyze a customer's financial behavior and tailor product offers or financial advice just for them. Think of it as personalized banking at scale. Automated analysis is about using AI to do the heavy lifting in number crunching. Whether it's generating a financial report, forecast, or sifting through market data for insights, an AI service can handle it in seconds, allowing our human analysts to focus on strategy and interpretation. We also have AI chatbots and virtual advisors. For example, Bank of America's Erica chatbot has handled over 1.2 billion client interactions, providing personalized insights and guidance. Even smaller regional banks like Regions Bank turn to AI, IBM Watson, to answer 22% of customer questions automatically, a huge boost to customer service without proportional headcount growth. And in risk management, AI models can greatly enhance credit scoring and risk assessments. They consider far more variables than traditional models. For example, some lenders use AI via API to instantly decide on loans with higher accuracy. Upstart's AI Credit Decision API is one such solution, allowing banks to approve more loans with lower default rates. These use cases show AI integration isn't theoretical. It's happening now, delivering tangible benefits. When selecting AI API providers, it's important to know the landscape. OpenAI leads in natural language AI. Their GPT-4 model, accessible via API, can understand and generate human-like text. This is powerful for any application dealing with documents, chats, or unstructured data. In fact, Morgan Stanley integrated OpenAI's API to help its financial advisors tap the firm's knowledge base quickly, a great example of turning AI into a strategic tool. Next, the big cloud players, AWS, Azure, and Google Cloud. These providers offer a suite of AI services out of the box. For instance, AWS has a dedicated fraud detector API to catch fraudulent transactions, among many other AI tools. Microsoft's Azure Cognitive Services and Azure OpenAI integration are excellent if your infrastructure is already on Azure, or if you need Microsoft's enterprise support. They cover language, vision, and even offer GPT-4 with the compliance guardrails companies need. Google Cloud brings its strength in machine learning. They have APIs for translating languages, analyzing images, think automatically reading checks or IDs, and Dialogflow, which many banks use to build conversational interfaces. Then there's IBM Watson, which has been in the financial AI space for years. Watson's services are battle-tested for things like customer support chatbots, e.g., some banks have used Watson to handle customer queries, and analyzing large document sets, useful in research or compliance. IBM often emphasizes trust and explainability, critical for regulated industries. Finally, beyond the tech giants, consider FinTech-specific AI providers. These are specialists offering APIs for specific needs. For example, FeedSci or FeatureSpace focus on fraud and AML detection using AI. They know banking data patterns deeply. Upstart offers an AI-powered credit decision API that some banks plug into their loan origination systems to instantly approve or reject loans with more inclusive and precise criteria. There are also providers for things like investment insights, insurance underwriting, e.g., Lemonade uses AI for instant policy quotes, and more. The key is to choose providers that match your use case, have proven success in finance, and meet your security and compliance requirements. Rolling out AI integration needs a strategic approach. First, pick your battles wisely. Focus on areas where AI can move the needle. Perhaps fraud is a costly issue, or your customer support is overwhelmed. These are ripe for AI enhancement. Once you have a use case, get your data in order. AI is only as good as the data it learns from. So, ensure you have the relevant data collected, cleaned, and that using it complies with regulations. For instance, check if using customer data with an external AI API is allowed under privacy laws like GDPR. Engage your data governance folks here. It's crucial in finance to not run afoul of compliance. Next, choose the right API provider and partner. This might involve evaluating a few options. Perhaps try a proof of concept with 2 different providers to see which AI model performs better on your specific problem. Consider factors like cost, some charge per API call, ease of integration, do they have good documentation and support, and security? Will your data be safe and is the provider compliant with finance regs? Once chosen, integrate the API carefully. Often, this means your software engineers will call the API from your existing systems. Tools like integration platforms or API gateways can help manage this. We also plan for reliability. For example, cache certain AI results or have a fallback process if the API is unreachable, so operations aren't disrupted. We start with a pilot, maybe enabling the AI fraud detection on one product line or launching a chatbot for a small segment of customers, and measure the results closely. Did fraud incidents drop? Did customer wait times improve? With positive results, we then scale up gradually, expanding the AI integration to more business units or use cases. Throughout this, it's vital to equip your team. Train your analysts, customer service reps, or developers on how to use and interpret the AI. And educate executives too. For instance, if an AI model flags a transaction as risky, the team should know how to double-check and handle it. Cross-functional communication is key. This is where HiGTM's philosophy of bridging the data scientist-executive gap comes in. We ensure the tech folks and the business leaders are in lockstep, understanding each other. Finally, we continuously monitor and iterate. AI isn't a set-and-forget tool. Models can drift, business conditions change, or new better APIs come out. We'll keep an eye on the performance metrics and user feedback, then refine the integration, maybe adjust thresholds, retrain models, or even swap out APIs as needed. This iterative mindset ensures the AI integration keeps delivering value over the long term. We also need to go in with eyes open about challenges and how to address them. Data security and privacy come first. As a finance organization, nothing is more important than trust. If we're calling an external AI API with our data, we must ensure that data is protected. That means using encryption, limiting what data is sent. Maybe we don't send full customer identifiers, just the features needed for analysis, and choosing providers with proven security. Many top providers have finance clients and comply with standards. For instance, they might offer options to run the AI in a private cloud environment to keep data in-house. Next, legacy systems. Our core ledger or older databases might not have modern API hooks. The solution is often an integration layer. We might use an API gateway or a tool like MuleSoft or Tibco to connect the old and new. In some cases, we upgrade parts of systems or use robotic process automation as a stopgap to feed data to the AI if direct integration is hard. Regulatory compliance is a big one. Regulators, and rightly so, are cautious about AI. They worry about how AI decisions are made, and if they're fair. For example, if an AI denies a loan, we need to explain why. We should favor AI services that can provide explainability. Some AI models can give reason codes or important factors behind a prediction. We'll also conduct regular reviews to check the AI's outputs for any bias or errors. On the people side, there's a talent gap potentially. This is where bridging the gap is literal. We have to educate our teams about how the AI works and ensure executives understand the potential and limitations. We might run workshops or training sessions, possibly with help from external experts. Meanwhile, having a champion at the C-suite, say a CTO or CIO who truly gets AI, will help drive adoption through any cultural resistance. Finally, cost and ROI. Any new tech investment needs justification. Consuming an API has a cost, often pay per use. We will manage this by starting small and showing quick wins. By measuring everything, for instance, noting that our AI chatbot deflected X calls saving Y dollars in support costs, or that our fraud losses went down by Z%, we make the benefits tangible. That data not only helps tweak the project for better ROI, but also builds confidence among stakeholders that this integration is worth every penny. Let's look at a few real-world examples that show these integrations delivering value. Morgan Stanley, a very traditional firm, embraced a cutting-edge AI API. They connected OpenAI's GPT-4 to their internal research content, of course with all the necessary privacy controls. Now an advisor can ask a question and get an instant summary pulling from tens of thousands of research reports. Andy Saperstein, their wealth management head, said this technology brings the value and richness of our knowledge to a whole new level and frees up valuable time for advisors. That's a clear competitive advantage. Their advisors can serve clients faster and smarter. On a smaller scale, Regions Bank in the US used IBM Watson's API to power a customer service chatbot. With that, they manage a hefty chunk of routine questions through AI. Account balance inquiries, branch hours, simple loan questions, all answered instantly any time of day. Customers are happier with quick answers, and the human reps can focus on complex issues. Another case. Many community banks and credit unions, which often lack big data science teams, have tapped into external AI for lending. They use Upstart's Credit Decision API, basically an AI brain they plug into their loan processing system. The AI analyzes applicant data, beyond just credit scores, looking at lots of variables, and returns a decision and interest rate. Banks reported that using this AI, they could approve more applicants, including some who'd be wrongly turned down by old-school criteria, without increasing default rates, effectively expanding their customer base safely. That shows how even smaller players can access sophisticated AI through APIs and not get left behind. In payments, companies like MasterCard have integrated AI for fraud detection. MasterCard's Brighterion platform is an AI they acquired and integrated. By having an AI score every transaction in milliseconds, they prevent a huge amount of fraud. This protects their brand and saves money. Finally, consider fintech innovators like Lemonade in insurance, which is adjacent to finance. They built their whole system with AI integrations, from a chatbot that handles claims to AI risk assessment for underwriting. The outcome is striking. They operate with far fewer staff per customer, because the APIs handle the routine work. While a bank is not an insurance company, the principle holds. Strategic AI integration yields speed and cost advantages. These cases underscore that whether you're a global bank or an SMB in finance, the right AI API strategy can drive significant improvements. Let's bring it to the bottom line. ROI and competitive edge. First, efficiency gains directly translate to cost savings. If an AI tool automates a process that used to require a team of people, that's a clear reduction in labor costs, or an opportunity to redeploy those people to more value-added tasks. Some studies have shown around 20% cost reduction in certain operational areas with AI automation. Think about tedious tasks like reconciliations or compliance checks that can be largely automated. That saves real dollars. Next, risk management improvements. If our AI integration catches a fraudulent transaction that would have slipped through, we save the cost of that fraud. If it more accurately assesses loan risk, we avoid making a bad loan. Over time, these savings are substantial, and importantly, they shield us from downside events that can be very costly for financial institutions: fraud, credit losses, regulatory fines, etc. On the revenue side, AI can help grow it. By providing personalized experiences, like recommending just the right product for a customer at the right time, we likely increase cross-selling and customer loyalty. A happy customer who feels understood will bring more business. Industry projections even suggest AI could add almost $500 billion in new revenues in banking by 2025 through new products, better customer acquisition and retention, and innovative services. There's also the intangible but powerful competitive differentiation. If we integrate AI early and effectively, we can offer things competitors might not. For example, an SME lender that can approve loans in 5 minutes, because an AI makes the decision, will beat one that takes 5 days. Or a bank that offers an AI financial coach via mobile app gains an edge with tech-savvy customers. These differentiators attract media attention as well, positioning us as a forward-thinking leader. Finally, scalability. AI APIs allow us to punch above our weight. You don't have to be a JP Morgan to leverage world-class AI. You can be a 50-person credit union and still use an API that taps into Google's or OpenAI's intelligence. As our business grows, we just make more API calls. We don't necessarily need to reinvent the wheel or build massive infrastructure. That scalability is crucial for SMBs poised for growth, allowing them to expand services without a commensurate rise in cost or complexity. All these factors combined mean that integrating AI isn't just an IT project. It's a strategic investment that can yield significant ROI and a sustained competitive advantage. To wrap up, let's talk about what we as leaders need to do next. First, it starts at the top. As CFOs, CTOs, CIOs, we need to sponsor and champion these efforts. If leadership signals that AI integration is critical for our future, the organization will follow. That means making it part of our strategic objectives and ensuring teams have the budget and support to execute. I recommend creating a cross-functional task force for AI integration. This isn't purely an IT project or purely a business project. It's both. Bring together your tech people, architects, data engineers, with your business process owners, finance managers, risk officers, etc. At HiGTM, we often facilitate exactly this kind of collaboration, because aligning these groups is where the magic happens. Next, lay out a roadmap with achievable milestones. It helps to target a quick win early on, something visible that demonstrates this works. Maybe that's a small-scale fraud detection rollout, or an internal AI tool that generates your financial report commentary automatically. When others see a win in a few months, it builds confidence and enthusiasm to take on bigger projects. Also, cultivate a continuous learning culture around AI. The field is evolving fast. What's cutting edge today might be standard tomorrow. Encourage your team to stay updated, maybe through trainings, webinars, or sending folks to industry conferences. And as leaders, we should also educate ourselves. Understanding at least the fundamentals of how these AI APIs work and what they can do will help us make informed decisions and inspire our teams. Importantly, be willing to experiment and accept failures on the way. Not every pilot will succeed, but each will teach us something. Lastly, don't hesitate to get help from experts. This is a complex area, and consulting firms like HiGTM exist to guide organizations through it. We bridge the gap between the deeply technical and the strategic, ensuring you get a solution that makes business sense. An external perspective can spot pitfalls you might miss and bring experience from other projects, accelerating your progress. The key action item I'll leave you with. Think of one area in your domain that's ripe for AI and task a team to explore it now, not next year. Start small, learn, and then scale. That's how we'll turn AI from a buzzword into real-world results for our finance organization. In conclusion, the integration of AI services through APIs represents the future of finance operations. It brings together the best of both worlds: rapid innovation, because you can plug cutting-edge tech into your processes, and hard efficiency gains, automation and intelligence that save time and money, which collectively give you a competitive edge in the market. The key to unlocking this value is to bridge the gap at every step, between data scientists and executives, between legacy systems and new tech, between caution and bold innovation. We've talked about how to do that: align teams, ensure leadership drives the vision, and maintain a clear focus on business outcomes. And truly, there's no better time than now for SMBs and financial institutions to embrace AI. The playing field is more level. You don't need a Google-sized engineering team to use AI. Many advanced capabilities are one API call away. Those who seize this moment can leapfrog competitors, while those who delay risk playing catch-up later. Finally, let's be the leaders who proactively shape this change. We can guide our organizations to adopt AI responsibly, ensuring we comply with regulations, mitigate risks, and keep the human element in focus, while reaping the substantial benefits. Thank you for your time and insight today. I encourage you to bring forth your questions now. And as you consider next steps, remember that HiGTM is ready to help you craft and execute a winning AI integration strategy, bridging the gap at every stage. Let's lead the change together.